The market continues to push at all-time highs, and the key question is, why are traders continuing to lose money? So when the market is straightforward, you have the bullish news. The key thing that really affects traders is patience, and they urge to take on trades that are not really set up. So in today's session, we're going to be focusing primarily on being disciplined to not force yourself on taking a trade that is bad. And in our SPX plays, especially our $500 account challenge, we set our rules that we must only take A+ setups. In this marketplace, you want to make sure that every trade is hitting no matter what. The traders that can survive the longest are the ones that will succeed in the future. If you're able to stick around during the hard times, then you will definitely be able to strive during when the market is easy. Finding these key market opportunities is key because every day everyone is tempted to constantly take on trades that force them to eventually blow their account. You want to be at a point where you become better and wait for the price action to come to you and you not chase it. Remember, as a trader, you are responsible for pushing the buttons on buying and selling. But in the StockX mentorship program, we emphasize on taking your time and having a consistent approach in growing your account. In the StockX mentorship program, we also provide coaching services so that you can become better. Having the ability to talk to me constantly is what differentiates us from other Discord services. Most Discord services just provide a copycat related service where they push these alerts without even giving the proper guidance. In the StockX mentorship program, I give you the entry point before it happens, and I also follow it up with the potential exit point, and we have a standard rule. If the trade makes minimum 50%, we call it a good trade. And if you decide not to sell at that particular point, then and you are pissed that it's gone back down after hitting that inflection point, then you really have to go back and realign your risk tolerance. So today we had another very successful trading day. We had one great SPX trade, and we had amazing swings that we took as well. And an awesome NVDA intraday trade as well. So let's talk about what's happening in this marketplace. We're also going to give you guys a brief review about our charts and where we see things going on Friday. For everyone that's in the free Discord, we're also going to be providing live voice trading, so you'll be able to have access to us and hear me live trading that I do every day, access at your fingertips. So let's get started and let's discuss what's happening. So first thing, as always, I like to always talk about the market structure. Now, understanding the market structure is crucial for us to pretty much get a grasp of what type of market we are dealing with. So in the War Room, which is our first report that we always provide, we explained that in this marketplace that the key trading range pre-market was between 54.57 and 64.92. Sorry, 64.57, 64.92 was the key trading range. Now, this is post NVIDIA results, post Snow earnings. So even though NVIDIA was down at the lows of 4%, the market managed to climb higher. Now, why did the market manage to climb higher? The reason is because NVIDIA came out with news suggesting that they are going to be trying to make a deal with China with the US government to sell their Blackwell chip, and in return they'll be providing some sort of revenue back to them, right? So that is what caused the semiconductors to really drive here, okay? In this report, we mentioned that the majority of the probable trading range for the call gamma would be between 6460 and 6500. Now, if you guys look in this key trading range, this was the start of the trading day. We opened up at the pre-market high and we've seen a dump, and the low was around 6460 here, okay? So we can see here that the markets went to 6508 at the top, but you can see for 80 to 90% throughout the entire day, it was only till 1 p.m. till we tested that 6,500 zone, but throughout the 80% of the day, we pretty much stayed below 6,500. So I would say this is a solid piece of information here as well. We mentioned that the market would get bearish once we get under 6460, and that did not happen. That's very crucial to remember, especially when you're trading SPX. This is why we have this bullish gamma territory 6,500 and 6460. It's very important to know this, because once you are below or above these numbers, you know exactly what the overall sentiment is. In between is going to be chop, and when it's chop, you take your profits, you don't hold too long. Once you are above these ranges, that's when you can decide, okay, do I hold longer? Is there other opportunities available? Because based on the model, that's how essentially it works. We give our prediction that was likely to be a choppy market based on the distribution, and we gave a trading range between 6,500 and 6,460, which was the awesome report, and members definitely benefited off this. Our neutral range that we gave here is 6,470, so exactly 6,470 to 6,490 was going to be our chop range, and that's exactly what we've seen here in the blue zone. So you can pretty much see that the graph is exactly the same. This is just a little bit zoomed out, of course, as the day goes, but all the numbers are aligned with the 6,500, 6,490, and so forth. So we are very big on our transparency that we do in the mentorship program. Now, going over our trades here, okay? So pretty much for today, I've been telling you guys I'm bullish on CRWV, right? So we started our day off by taking profits right at the open on CRWV. Why did we take profits? Simply because when we look at the CRWV chart over here, we were holding this trade since last week. We had over 3 grand in the play here, and we knew that it was in the bullish breakout zone at the open here. But because we were holding this trade for a very long time and we've seen the red of holding it, we decided to take the profits when the opportunity gave us. So we took the profits, nice double there. Then we decided to buy these NVDA 175 puts. These NVIDIA 175 puts was a huge winner. I forgot to post the sell there, but we actually managed to get over 120% on that NVIDIA play. Now, the key reason why we decided to get NVIDIA is very straightforward, is because it's pre-market high. So looking back at NVIDIA, and this is where it is. Let me just forward it there, so we know exactly the reference. So we sold NVIDIA for around 124%. The reason why we decided to get NVIDIA is because the market was at the pre-market high here, and we knew that NVIDIA was weak, okay? So with NVIDIA being weak, it went positive at the open, and we found it to be a great opportunity on the premium front to take a potential trade. And the other factor is that NVIDIA was very close to hitting my level 1 bullish here. Okay, so this level 1 bullish is where we decided to take the put, and we literally just scored a nice awesome play off the level 1 bullish, because NVIDIA report was great, but the market makers wanted to take it to an inflection point, which they did on our model, level 1 bullish here, and they caused it to dump. So level 1 bullish, just so you guys can see, these levels are given to our members before the start, before the week even starts. So going up in this particular zone here, you can see that many times I've called the tops and the bottoms every trading week as we go along. So as I find my NVIDIA chart and analysis over here, normally I have it pinned, but we see that we're looking at ARM here, for example. And on Friday, we're going to give you guys an overview of all of the levels and so forth that we are going over. So NVIDIA analysis, and this was given on the 24th for the week of the 25th. We see that 184.72 was where we had the inflection point, just like you guys see over here, okay? So this was a key earnings range, and that's why we took that put. that managed to give us over 130%. As I explain this process to you guys, there's a reason why we take every single trade. And the next trade that we have done is that we placed an order to buy SPX 6460 puts at 1.8. We put 20 contracts, which is basically emphasizing the confidence in this particular play. We gave a SPY alternative as well, and we also called it for our 500 to 5K challenge account. Okay, so in our 500 to 5K challenge account, we said we're gonna buy 3 contracts because you know, we couldn't get partial contracts or whatever. So that was max contracts we could buy, not including commissions. We put over $555 on the line here. We got the fill just like we did over here. Everyone got the fill. The $500 account challenge filled first, right? It filled, and literally once it filled, in a couple of minutes, we got the sell. So that took our account here. We're only aiming to do 1 trade per day, 1 A+ sell, because we have to do it 10 times before we are full porting this. Okay, so the count is already up 60% with regards to that. Now, this A+ setup that I did here, I, however, sold it for 63%, okay, which was a nice banger here as well. Now, the reason why we've taken this particular trade was because of the premiums, okay? So looking at these premiums at this particular point of view, we were seeing that once the market hit the pre-market high here, the call premiums, which was certainly up, we start to see the market start to sell these 6,500 calls. When we see valuations drop on these premiums, that's when we know that there's an opportunity to play the opposite side. So looking back at the chart here, we can see that the pre-market high zone was exactly where SPX really wanted to start diving here. So by aligning the entry points and pre-announcing, we can definitely find the key demand zones where you look at the call premiums. Once they get too expensive and they reach an inflection point, find the entry for the put side here. It may sound very difficult to do this, but over time, if you focus on learning option premiums and analysis, then you can definitely do that. So we scored a beautiful trade on there. Then eventually we tried to get the 6,500 call at 50 cents. It didn't give us that play. We took a 64.90 put at the close. It didn't work out. That was a complete lotto, literally in the last 30 minutes. And in the free room, we also gave this amazing SPY play, which gave the team 60%. So besides that, guys, I do very well with SPX trades. Besides that lotto that I gave in the last 30 minutes, we were flawless on all our SPX plays. But one thing we are also flawless on is our long-term swings here, okay? So in our long-term swing cycle, we gave 3 solid trades. This was just a test about premiums here, but we gave 3 solid trade ideas. The first one, NVDA 160, which hit our target and was confirmed to be a winner in only 1 day. So that wasn't technically a long swing, but it made a lot of money right off the bat. We call this gold, the 320 call, which is slowly climbing higher right now. It's currently up 60%. And we gave this long-term CRWV 150 call just yesterday, and that's already up 50% as well. So a lot of these plays are already starting to hit, and we're providing constant updates with regards to that. Now, besides all that, the key focus in this lesson is waiting for the right setup. What I had shown you there was that even though this market was showing a little bit more volatility, we didn't force the trade here. We wanted to get in when there was a option premium point that was suitable entry point. We waited for that, it came to our thing, and we had a defined order and where we wanted to sell. With these gamma reports, we can see that the price action and the market structure was choppy. So by intertwining all these key levels and all this information, we know exactly what the market outcome is going to be. And this is how we managed to find successful trades on NVDA, CRWV, and also on SPX and SPY. So if you guys want to learn this, join our mentorship program. We provide you with the coaching so that way you can do better going forward. Thanks for tuning in. We'll see you guys in the next one.